Hello, everyone. I am Marc Tilleman from the Peace Data Association. I am excited to be surrounded by super impactful actors of the crypto space for a 45-minute-ish panel on investing in the future, so Web3 capital investment. I'll quickly introduce our panelists. So on my top left, I have Nic Carter, the general partner at Castle Island Ventures. We have Jonas, who is from Wintermute, the lead for all venture and M&A. We have Alpen, partner and head of policy and research at Borderless. And we have Cheyenne, investor partner at Multicon Capital. Maybe, Nic, I'd love to hear like additional info from each of you and what your company does, and ideally the connection to the Pyth Network. Let's start with Nic.
Sure, thanks for having me. Excited to be here. Of course, we're a conventional venture capital firm. We primarily invest actually in startup equity at the seed and Series A stage. All themes, all jurisdictions. We're based in the US, but we have a global outlook. And we're investors in Pyth. I've been for a couple rounds now and very excited to see the progress, and now we're excited to see it go live.
Thank you. Jonas, maybe?
Yeah, no, good to meet you all. I represent Wintermute Ventures, the strategic investment arm of Wintermute. Wintermute, the core business, have been a data oracle for Pyth for a while, but I think this time around we also decided to double down on our venture side and invest in Pyth. And clearly, very important for us is trading applications, whether decentralized and centralized. And for both of them, we see oracles and Pyth, a core component of them. That's why we're sitting here today.
Cool. Cheyenne, maybe?
Yeah, so Multicoin is an investment firm. Our mandate is to invest in crypto and crypto adjacent tech. We have 2 flagship vehicles, a hedge fund and a series of venture funds. We are thesis-driven investors across both of them. Spend a lot of time thinking about markets and market structure, and it's very clear that oracles are sort of foundational primitive in bridging external state and on-chain state. We're super excited about kind of novel innovations Pyth is bringing to architectures around that, and all the interesting things you can do given the application of these new architectures. We are also investors in Pyth Network and super excited to be working closely with the team.
Amazing. Let's kick it to Jordan, maybe.
Hey everyone, yeah, Bodhi Ventures. We're a prop fund mostly focused on early stage equity and token networks. Our relationship is multifaceted with Pyth. So we originally started our relationship via synthetics. So we've been sort of one of the largest, I guess, consumers of the data for a while now. And so we've got a really close hand look at sort of, structurally the innovation that Pyth is providing. And then also we're investors, so happy to be supporting in multiple ways.
Amazing. Thank you so much. Alpen, maybe?
Yeah, thanks. So Borderless is also a Web3 crypto fund. We focus heavily on infrastructure and invest globally across the entire Web3 ecosystem, and both in equity and tokens. We also have a thesis that's pretty geared towards what we see as the kind of table stakes going forward around interoperability. And we have a cross-chain fund focused on interoperable infrastructure and teams building in that space. For us, Pyth stands out as one of the key protocols that's building across so many different ecosystems. We're really excited about the way they've built out their network and this move towards more decentralization. So we're excited to be backing them.
Thank you very much. And last but not least, Jose, so partner at Delphi Digital. If you wouldn't mind just further introducing yourself and maybe mention the Pyth relation.
For sure. Yeah, I'm a co-founder at Delphi Digital. There's kind of 3 parts of the business: the research side, which probably most people know us from. Then we have the venture side, where we have two funds, primarily prop capital. And when one of those funds, we invested into Pyth and have the relationship there. And then we have the lab side of the business, where we're kind of a venture builder and incubator. And we've worked closely with Pyth from the very beginning. Some of the protocols we incubate, like Mars Protocol and a few others, were some of the early users of Pyth, and have been super pleased with the relationship. We kind of understood these issues both from the investor side and from the builder side, like kind of the risks of existing Oracle solutions. And I think we were really excited about the Pyth design. Really excited about their plans for decentralization as well. So yeah, aligned on a bunch of fronts.
Thanks everyone for the intros. Now that the stage is set, I want to start on, I feel, a very topical question, as pretty much is the bull market is back. We don't know, we'll see. But what I wanted to get from you was, how differently do you behave as VC or general backer during a bull versus a bear? Maybe we can start with Jonas, because I know Wintermute is constantly active. How do you manage bull bear? What do you focus on?
I mean, I think bull and bear is a good test of times, and I think we've gone through it with FTX last year, which was probably the drop of the bear market, and now we all at least expect the bull market is coming around the corner. I mean, I think it's essential for firms like us. We're strategic investors, slightly different than a VC firm. We think slightly differently, but at the end of the day, we back founders, and we're going to back founders regardless of whether it's the bear market, the bull market. I think you have the luxury to have a little bit more time, a little bit more common sense in a bear market than in a bull market, and especially in this sort of like crypto, where things to move slightly quicker in a bull market, and maybe not always with I would say, thoughts. There's more thoughts in the bear market and less in the bull markets. I think that's one of the big things for us. And then clearly a firm like us, we tend to be active. A firm like Wintermute, at the end of the day, big benefit to us is volatility. So a bear bull market, as long as there's a little bit of volatility, it's beneficial for our core business. And on the venture side, I mean, we look to founders, and you tend to see a higher quality of founders in the bear market. They stick around, they have tenacity. So yeah, I mean, that's maybe a classic song from a VC, but I think it's very much true in these days.
Anyone here, I'd be very interested to hear if anyone or any company solely, let's say, or try to refrain to invest during a bull and just kind of invest during the bear, as Jonas mentioned, more time, more send choices, and you just reap, let's say, the benefits when it's ready. Alpen or maybe Shyong, because multi-coin, as you mentioned, very thesis driven. So many times you're against the wave. How do you manage bull bear?
Yeah, I don't think anything fundamentally sort of in the meat and potatoes of our business changes. I think bull markets are generally just more noisy, and bear markets are a time to sort of regroup and reflect and, really sit down and do a little bit more of the work. But the core business of partnering with exceptional teams that are trying to solve really large problems remains the same throughout. Obviously, bull markets mean that a new wave of founders comes in, general engagement becomes, easier to attract. Charts go up and to the right. That makes everyone feel happier. It's always kind of an opportunity to be a little bit more cautious when the numbers are going up and to the right about, how much of that is earned versus how much of that is not. And so kind of adjusting for, some of these things, you do kind of have to recalibrate a little bit and make sure your head's on straight, both as an investor and as a founder. But I don't think fundamentally anything, is meaningfully different in what we do.
Yeah, happy to add a comment. Yeah, happy to add a comment here. I think I don't think the extreme is necessarily kind of commonplace where you only invest in the bear market, but I think that you have the ability to focus and have more deeper kind of conversation and discussion with founders to really get to the heart of what they're building. And it's harder, it's noisier in the bull market. But I think, you have to invest throughout the cycles. We definitely found a great amount of companies and founders building in the bear market that because there wasn't all the noise, allowed us to really focus in and hone in and find the best teams. But I think, obviously as things grow, you have the opportunity for these companies to really get to grow their markets, to grow their networks, grow their partnerships. And I think that's what a lot of them are taking advantage of right now. I think as we're in the early stages of the next cycle.
I'll just add something as well. I think it's easy in hindsight to say that emotions, don't play so much into your decision making. But I find that the biggest difference between bear and bull is actually how you, not only what emotions you have, but how you deal with those emotions in terms of how you view the market, how it relates to your performance, and how it relates to the portfolio as well. So it's very difficult when the herd is going in a certain direction to kind of pull yourself away from that thinking.
And I saw, Nic, you wanted to reply. So let me actually guide you to the next one on when investing, whether bull or bear, what is the signals you look for a high-performing team, founder, or great protocol design?
Well, we have a very simple framework at Castle. It's people, market, product. I forgot the last one. That's incredible. Well, there's 4 things that we look at. So pretty conventional venture approach for us. Obviously, founders with a strong founder market fit. Market size obviously is a consideration. And then we actually diligence and use the product. So pretty straightforward formula. And I can't believe I forgot the 4th prong. It's embarrassing. I've been doing this for 6 years.
There's someone else here, maybe doesn't have the 4th P, but another signals you look at specifically?
Yeah, I can jump in. So generally we look at team strength, we look at market opportunity, we look at connectivity as well, like how likely are they to either in their category, subcategory, be able to kind of make a dent, have relationships built, etc. We also look at deal terms. Obviously, that's important. One thing that we also try to kind of really dive into is how well reasoned is their sense of kind of the solution and the problem itself, because that's a kind of a good measure in terms of how they're going to kind of deal with changes, which inevitably there will be in terms of their product strategy and maybe the market itself. So I think it's a good insight into how well the team is going to pivot if necessary.
Yeah, and I think
one thing.
Jose, maybe.
Sorry, go ahead.
I was just going to add that, for us, we have 2 main areas or theses of focus where we tend to invest in the VC space. We use that as a key metric for understanding the sophistication of the founders and the way that they're approaching the market. So we have one which is in the cross-chain infrastructure category, where we're looking at founders that really understand the evolving landscape of different protocols and how they're going to leverage cross-chain infrastructure to basically maximize the addressable market in Web3. And we also have a deep-in fund that's dedicated to teams building in that space, and have built quite a bit of experience working with pretty much most of the founders in the space to understand what are the challenges specific to that category when you introduce infrastructure, the hardware at the retail level, or at the at the distributed, geographically distributed kind of hardware level. So we generally look for team strength and sophistication, their approach to the market, and I think that understanding and how they align with our thesis is extremely important for us as well.
Yeah, definitely agree with everything that was said. I think one thing that maybe, and on the bull and bear, I do think it's hard to only invest in a bear market, because a lot of the best teams will wait for a bull market to raise, right? So you just tend to have better deals in a bull market. Like obviously for liquid opportunities, it's the bear market's the ideal time to invest. but in my experience of like 2 cycles, it just seems like there are better deals in a bull market, which it makes it harder to be counter-cyclical as a venture investor. And don't get me wrong, there's definitely obviously some great deals during the bear. You have way less competition. You have way more time to due diligence them. But I think that's a big one. And then also the bear market kind of like sows the seeds of the next narratives for the bull cycle, where a lot of the things that failed during the bear market, whether it's designs or centralized points of failure or like regulatory points of failure, sow the seeds for the solutions that are needed in the next bull market. And so you can look at a lot of that to kind of find what's needed next. And that's always like a process that we go through in the bear market. And I think every crypto investor goes through it somewhat, where you're like, re-examine your crypto thesis, and you're like, why are we here? What needs to exist? Like in 5 years, what does the crypto space look like in my bull case? And what are the primitives that don't exist now that need to exist? And we definitely went through that and came to some interesting conclusions. And then agree with what everyone else said in terms of what you look for in teams. One interesting one that we used to look for, like it was in our initial sort of maybe like the 4 Ps equivalent or whatever, was like value capture. So like not just how much value or utility does this product bring to people, but how much can it capture? And I think that has caused like some of our biggest misses, like was like mid-curving value capture. I mean, one good example is like ENS, where I think we passed at like 8 million or 10 million, right? Because we're like, how does this, like, I really think this is going to be successful, but how does a Ethereum username service like make money? And the answer is we don't know, it doesn't matter, right? And I think there's been a bunch of deals where we sort of, or like a few deals where we made that mistake. And it's hard because obviously there's the other side where if you don't think about that enough, you can also end up over investing in a lot of stupid things. But I think especially in crypto, where like pivots are common, things evolve very quickly. I think the value capture is a requirement that we've like relaxed or tried to be a bit more open-minded about, especially in the bull market.
So talking a bit about somehow pivots and linking with Alpen and borderless position into like cross-chain infra and deepin, is there for all of your company and even for yourself, like a few, let's say, new or even old narratives that are going to get hot for this kind of coming cycle? Love to hear from Jordan again.
I've got one, yeah, on-chain trading. So I think, we've been talking about it for a while. It's something that's sort of within my orbit with synthetics, really trying to kind of not only create or build infrastructure that allows us to kind of onboard a lot more users, being on Optimism, having front ends that are building for really going after centralized, users. Kane is obviously working on Infinex. We've got other front ends that are plugging into the protocol, but there's others as well. Obviously, DYDX. There's Phoenix and Solana. There's the project called Warp, and so there's different versions of on-chain trading which are going to be, I think, in this cycle, going to be significantly larger than they are now, and it's a confluence of a bunch of different reasons. One is the infrastructure is better, and two, the regulatory landscape has changed, and also the trust aspect has also changed significantly since last cycle. So, I do think long term, all of trading basically comes on chain in some form or another. But even in the medium term, I think at the end of this cycle, we're going to be there's going to be a lot more on-chain trading across the board relative to centralized trading.
And with Wintermute being among the biggest crypto trading firm, I'd imagine this is something you're quite happy to see and becoming a reality.
Yeah, I was expecting the answer. I mean, if a firm like us, we also have to be agile, right? We have to stay where the trading is. We have to be liquidity, provide liquidity where it is. But I think, we very much agree with Jordan. On-chain trading is the future. It creates a lot of transparency, which I think is the core primitive here. Is the more transparent you can make it, the more trustless. That's really the goal. The question for us is really, when does it when is it going to be able to compete like to like with a CeFi? Because as much as we don't like some of the aspects of CeFi trading, it is just from a user perspective, it's a high bar to beat if you have to be, not only the, settlement, the order book, everything has to come on chain. It does set the bar pretty high. So I think it's a space we love to back. I mean, we also back Begonia, which do on chain order book. Like, it's a space we love and we believe in. I think we always just have to be pragmatic that this is not something that's done today, tomorrow. It's the next 5 years. But at that point, hopefully, on-chain is as competitive or off-chain in the simplest of things. And I'd love to hear if people disagree with that view.
But the on-chain trading, like performance relative to centralized exchange, has grown like the past month. I think it recently reached like 10%. So it's kind of old narrative becoming actually like actionable this cycle. Maybe Cheyenne, from multi-coin perspective, do you have like your eyes set on some kind of niche within Web3 already for the future?
Yeah, I mean, I think there's a couple here I can hone in on. One that I spend a lot of time personally thinking about, just broadly, deepens or decentralized physical infrastructure networks. I know Alpen and Borderless guys are super interested in this thesis as well, so I'll let them chime in as well. But I think we've seen over the last few years V1s of these physical infrastructure networks that are figuring out the basics of how to operate asset light and kind of invert the cost structure of building out distributed networks in things like telecom, compute, storage, very broad industries. And V2 sort of over the next few years is going to be refining sort of that incentive layer and figuring out meaningful configurations of hardware to really start engaging the demand side. I think what we've learned over the last few years is you can build out a very strong supply side, but these networks really sort of start to kick off when you have thoughtful kind of approaches to market for the demand side. And I think we've seen a handful of teams kind of kick things off in that direction and really start to get a little more sophisticated about that. And so one of the reasons we're excited about this is the core questions of like what consumer apps look like in crypto, or what is crypto useful for. I think you want to spend time on things that are uniquely enabled by crypto, like sort of business models that would not exist without the chain, and deepens as they are structured, rely on arbitrary bidirectional value flow going to anyone in the world, right? That seems to me like one of the most compelling use cases, and we're starting to see a lot more founders, a lot more industries, a lot more shots on goal on that thesis, and generally excited about that one.
And one specific question I'd like to ask Nic. I know you as the master of stablecoin, or at least one of the master of stablecoin. It's one of the biggest success of application in crypto. From Castle Island venture perspective, are you already like active in one, or is it something like we see more and more CDP, like collateral debt, like backed stablecoin, whether it's euro or other currencies? Like, is it a sector you look at, or you have very broad and we pick whatever seems the right fit at the time?
Yeah, about a month ago, I called the bottom on stablecoin supply, and it's clearly begun to creep up again as balance sheets have increased and capital's flowed back into crypto. So yeah, I mean, look, I could just do stablecoins for the next year, and I think there's enough to do there. We invest at every layer on the stablecoin stack, from infrastructure to applications, so protocols themselves. And what I'm excited about now is interest-bearing stablecoins, both tokenized treasuries. Obviously, you have 500 basis points of negative carry if you're holding a conventional non-interest-bearing stable, so I think that'll change. I'm also excited about crypto-backed stables. I think ETH and staked ETH-backed stables are a pretty exciting theme, and I think they'll take a big bite out of the market share. And then also what really excites me is basically fintechs and neobanks and mobile money apps that are powered by stables, and remittance apps that are powered by stables on the back end. They'll look like conventional fintech apps on the front end. And we're seeing huge huge growth in that sector at the moment. Frankly, I think, these kinds of applications that abstract away blockchain usage, but are still powered by stables for the kind of cross-border settlement, that will probably be the thing that brings the next few 100 million users into crypto, if I had to guess. And I think it's also incredibly good for the welfare of people that don't have access to US dollar banking. So as far as sort of applications that'll actually globalize crypto, that seems to me the most important one at the moment.
And I want to finish with Jose. With Delphi, you have why do you invest on within various ecosystem? I know you the most within the Cosmos hub within the Cosmos ecosystem. How are you like? What excites you within the Cosmos ecosystem, which us here might not be aware of?
Yeah, definitely on the lab side, especially we've incubated a lot of stuff in the Cosmos ecosystem. Although ventures, we definitely invest across everything, and probably 95% of our investments or so are outside of the Cosmos ecosystem. But yeah, in general, I think that Ethereum is the strong like market leader, and in order to oh, sorry.
Okay.
Sorry about that. And in order to beat Ethereum, you really need to have like some significant differentiator. And I think Solana has that with sort of like speed and this composability, like single sort of state machine. And I think Cosmos has that with sovereignty and the customizability that sovereignty gives you. And I think you're seeing product market fit for that with perp dexes, right? Like DYDX has moved to Cosmos, is very validating, but also like Hyperliquid, I think is one of the best perp products out there, and it's one of the Cosmos app chain. And I think over time you're going to see more and more of those use cases. You're also seeing like Neutron pick up and osmosis and activity there. The main sort of, I think the way I think about Cosmos is that for it to make sense to deploy an app chain or to deploy on an app chain, you kind of need to make sure that it kind of needs to be true, because deploying an app chain has costs, right? You need to bootstrap a validator set. You need to write Go code. You need to do all the things that it's much harder than you need to like bootstrap wallet support. It's much harder than deploying smart contracts on an existing network. So it needs to be the case that what you build with an app chain is better and sufficiently better than what you could build with smart contracts to like account for that additional cost and complexity. And I think so far you've kind of seen that happen with perp dexes. I think I think for trading, it's going to make sense as well with some of the stuff we're seeing Skip do of like internalizing MEV and things like that. But I think with everything else, it's sort of like an open question right now. But I am very confident that there's like a use case for sovereignty. And I think it's also like very likely to be like the end game for successful applications that deploy on other chains, that they move to their own app chain eventually, because they want that sovereignty. They want to own the whole stack, be able to customize the stack to their preference. And so, yeah, I think we're going to see more and more of that. We've already seen it with like the step-ins of this world, and obviously, and others like Forte and stuff. But I think we're going to kind of continue to see a trend towards that.
Yeah, I want to add a quick point to that. I mean, we have a similar thinking on this, that we're going to continue to see evolutions and expansions of these different sovereign protocols. You see it playing out in some ways with modularity right now across the different EVM layers, layer 1, layer 2s, etc. For us, a key dependency, though, for all of this to work is interoperability, because you can't. What our concern, past like year and a half, 2 years, has just been the rapid pace of these new chains, these new ecosystems. Has obviously it's impressive to see them bootstrap and grow, but it's also hard to see when you invest in a particular ecosystem and then see that it's kind of fragmented amongst or siloed amongst all these other ecosystems. So I think strategically there's a key need for interoperability to make all of these different ecosystems actually function in a coherent way, and that users are not having to navigate this like maze of different protocols. And I think it's kind of what is evidenced by or highlighted by Pyth, because like they're able to engage and immerse like themselves into every single like pretty much most of the ecosystems using Wormhole in their case very effectively to provide something that's of high utility, right? It's real-time first-party data. And so we're really bullish about the fact that there are going to be these different sovereign ecosystems, but we think that dependency is having security and interoperability, you know, for users to actually leverage all of that.
Yeah,
As you mentioned,
I agree with that. I also think that is the trade-off of sovereignty, right? It's like you have this janky, disconnected UX because sovereignty implies that you have your own rules on your chain. And that's why I think a key principle of Cosmos was to also create the interoperability layer so that different sovereign chains can kind of communicate easily. IBC, I think, historically has been really difficult to use, and like people get stuck with phenoms and things like that. I think with Skip's new API that they're building, Skip protocol, plus what we've seen with circles like CCTP, it's like simpler than it's ever been and kind of cheaper than it's ever been, both to get to Cosmos and to get around Cosmos. And you don't inherit any like additional trust assumptions that you might do with other bridges, right? So yeah, I'm kind of excited about that.
I wanted to bounce off Jose previously mentioning like seeing ENS early days, missing it. I'd love to hear from those who happy to share if you had like one redo, or whether it's a specific project or just more general like category or vertical within crypto. Is there one one you would love a time machine, just go back and actually say yes and like support that protocol?
No one's had a miss
No.
in their career.
All right,
I
perfect.
think it's more we've had more than one miss. What is the biggest miss? I think you all have to miss on evaluation, DD. There's various things, right? It's always easy in hindsight.
One that comes to mind for me, I guess, semi-recently is Eigenlayer. I had an opportunity to have a look at that, and for whatever reason, I think it was the valuation at the time. Definitely regret it. Partly because, of potentially the financial outcome, but also partly because I actually really believe in the restaking model, and I think it's going to be a big part of Ethereum. Like it's going to be a similar thing to Lido, right? Like in terms of just importance to the ecosystem and things like that. And a way of kind of solving for that miss is we're investing in a bunch of other kind of protocols that are building on top of Eigen. So a miss that we're trying to rectify.
So maybe I'll rephrase to this question, which might be easier to answer from your end, is what have you changed now from that miss? And maybe, I don't know, so maybe Nic on this, if you want to start with it.
Yeah, I can chime in. So I used to get this question a lot, and my answer used to be FTX. Actually, I looked at the seed and the Series A, and we passed both times, and I literally lost sleep over that over the years, and now my thinking has changed on that. I think I'm ultimately content with the process that led to the miss, because basically we felt we obviously didn't know anything amiss was happening, but we felt it'd be difficult for an offshore exchange to ultimately come onshore. Another one that comes to mind is actually Dune Analytics. I gave them a term sheet at 12 million seed, and ultimately we didn't invest because we were concerned about the corporate governance in Norway, of all things. And so what I've done is now become more willing to invest in unorthodox jurisdictions, let's say. And as things have moved outside the US, like we have to do that now. We don't have a choice. So that's one way we've evolved our practice, is being more willing to take on the brain damage from tax and regulatory and legal concerns of investing offshore. But we just don't have a choice these days with things moving outside the US.
Nick, as a Scandinavian, I get slightly offended by Scandinavia being an unsafe place to invest.
Yeah,
I'll say
no,
it's
that wasn't what I meant to.
we have so many
Yeah,
rules in
no,
Scandinavia. We have a rule for everything, and also investor protection. So go ahead in the future.
no, I know. I changed my mind on that now.
Cool. Maybe so. If we change gear, I'd love
a
to hear.
quick response
Oh,
to Jordan,
go
actually.
ahead.
Like, Eigenlayer is an interesting one because it's one where we kind of actively left curved it actually as a learning from kind of ENS, where it was like we clearly understood there was like a supply side for this, like people would want to restake their ETH, but we didn't really see a clear like demand side. But we were just like, it's just Ethereum alignment as a service, right? And like people will clearly Ethereum alignment is valuable, and so it was like an active like left curving, even though we didn't know whether it's ever going to generate enough fees to kind of whether the demand will ever match the supply, basically. But it's interesting that that's the one that you mentioned because yeah, it's definitely one of the ones that we sort of actively left curved.
Might be more right curve than left curve, this one. But thanks a lot for these self-reflection, not always the easiest. And maybe one thing I'd like to hear, and maybe we keep it short, just from the Pyth perspective, is there one thing that kind of got you grasped, maybe early days, or like actually you were about to say no, and what if? Is it just the infrastructure? You mentioned Eigenlayer, the Celestia. It's like infrastructure getting all the raising money, more competition, the idea, what got you, let's say, becoming a Pythian? And maybe you can start with Alpen here.
Sure. I mean, in the Oracle space, I think I mean there is a dominant player, Chainlink, that has such high market penetration right now, and I think that you know if you look at the overall market, you know it's not even close, right? There's just a few that are very large players, and I think for us, what we found, you know, some of the core basics for you know investing in a team or investing in a company, you know, you check a lot of boxes when you look at the Pyth team and you look at the way that they're executing, and then I think fundamentally, the more and more we looked at this, we realized how valuable the outcome is of what they're building. You know, first of all, it's first-party data. I think that there's something so substantially important about that for markets to have that, you know, integrated into a protocol and accessible on a protocol. Obviously, real-time data is so important at this point. Not having that, you know, in the grand scheme of things, feels like would be potentially a reason for limiting the adoption of this technology. So I think that some of what Pyth is offering turns out to be, I think, essential for the mainstream adoption of this technology, especially in financial markets. And then I think the biggest for us, the biggest you know additional shift is this move towards decentralization that they've made, and I think that that really changes the game. I think that's going to catalyze this network substantially. I mean, they're already so prolific across Web3. I think over 27 chains, but I think that the way that it's being governed now, opening up, really, I think will catalyze this network. So yeah, I think there are a lot of different reasons that I could go into, but those are kind of the top ones for us.
Maybe Jordan or Jonas?
I mean, I'm happy to provide a bit of context here because clearly I think Pyth and why we kind of came over to the other side and joined Pyth was clearly, I mean, this is spun out back in the day from Jump, and don't see a secret, Jump is a friendly competitor to Wintermute. But the reality is we became an early Oracle. And then over the last, I think, 18 months, we just realized that a very high proportion of platforms we either investor in or a trader uses Pyth. So we kind of just been like, this thing is taking on, we digged into it. And then clearly the decentralization helped us as well on this journey. So it's kind of been, been a journey for us. I think it's a product that proved the way, and that's why we're sitting here today. And I think that's a big kudos to the Pyth team, because we eventually started as a competitor in the original days. So well done.
And we had Katya also from the Wintermute ecosystem yesterday presenting Bebop. So it's great to have that many connections. And maybe one thing from Shannon, was Pyth, you felt a contrarian bet? Because as Alpen mentioned, it's overall, it felt like winner takes all in Oracle. Did you feel comfortable and uncomfortable making that bet?
Yeah, I mean, I think just sort of as a meta comment, a lot of infrastructure in crypto gets built sort of looking backwards at like what are the constraints of, you know, how things are designed. Like AMMs would never exist if it weren't for the constraints of Ethereum block space, for instance. And like all of the Oracle constructions we've seen so far take this view of like, all right, this data is available in the world. We'll create incentives for people to come together and aggregate it. And then you come to consensus on it. And then you publish one transaction on a block. And if you just sort of like try and examine what's happening there from first principles, like it just sort of doesn't make sense for latency sensitive, mission critical financial applications. Like the traditional Oracle structure is just sort of like legacy Oracle is just fundamentally broken and like not designed to serve, you know, real meaningful trading use cases. And so when we first kind of got introduced to the teams at Pyth, I think understanding that like financial data is authoritative financial data comes from first parties, like price discovery happens across traders and exchanges. That's the venue where it should come from. And it should be sort of, you know, it shouldn't exist as like one portion of block space. Like applications and protocols should have a more sophisticated way of embedding a, you know, update in a price or some sort of external state change into their protocol. I think just on those two vectors, right? Like that seems like a first order correct way to solve the problem as these systems kind of scale. And so that, you know, it was really more understanding kind of like the reasons why, you know, the specific trade-offs that Pyth made mapped well to performant trading systems. And so, you know, that's why we were excited. And I think this architecture opens up a bunch of other kind of ancillary, product lines, like that. This new way of feeding in prices and thinking about state changes externally. There's a really rich design space for new application layer building on top of that, and so, you know, that was the reason that we were excited.
Amazing. I don't know if Nic, Jordan, or Jose wants to add up.
Yeah, I can chime in here. So as some of you know, I founded an institutional crypto data business in Coinmetrics, so I know firsthand how valuable data is and what an incredible business model it is. Incredibly sticky, very high margins. And if you look at, in TradFi, you look at the way these exchanges monetize data, is an increasingly large portion of their business. And with Pyth, I think they have the second mover advantage here in the Oracle space. They're able to see some of the mistakes, missteps made by the first movers and adapt to that. I think the first party data, being very deliberate about licensing and basically intellectual property of the data was absolutely essential. I think you will see more exchanges being very mindful of how the data is utilized as we converge to a TradFi model of data. So going out and striking those agreements was what really impressed me initially. And obviously latency and frequency really matters. So, we know they're best in class at that. And then adding metadata to the Oracle data, like confidence intervals, I think is really essential. We've seen oracles be the cause of so much pain for DeFi protocols, and so contextualizing it is essential. So in terms of team execution and then just thoughtfulness and being able to do this in a relatively lean way without bloat, I mean, it's very clear to me that Pyth is best in class.
Thank you so much for the kind words. Jose?
Yeah, I definitely echo a lot of what was said. In addition, like for us, oracles are like, I think the biggest sort of single point of failure in DeFi, especially like the dominance of Chainlink and stuff like that. And at the time when Pyth launched, like existing Oracle solutions, when you kind of looked under the hood, was basically a multi-sig at best and like an admin key at worst. That was, directly or indirectly influencing like billions of dollars of TVL, where, literally an Oracle can drain an entire money market protocol, right? A bad Oracle update. And so, yeah, like echoing what Nic said, that the metadata part, the aggregation algorithm, the confidence intervals was huge. And I think like at a high level, one of the big insights of Pyth that allowed them to optimize for this was that like the most important piece of Oracle data is like price data. So you don't have to build like a generalized Oracle protocol that can port in anything from off chain, which is what some of the competitors were doing. You can just focus on price data and really like build the best product in that realm. And I think that's what Pyth did really well. In addition to obviously having a great team, we're like very close with the Jump team and co-invest and stuff like that, and had a lot of confidence in them. I think it was the decentralization part and like this sort of recognition that price data is really the most important data, and you can optimize your product around that rather than trying to fit a bunch of different like much lower traction use cases.
I just want to add one other point that has been coming up as we speak to teams like unrelated, team after team, especially in the DeFi space, the financial space. When we ask them what they're using, so many of them mentioned Pyth or mentioned the fact that they're like looking at different options, but ultimately Pyth is one of their top choices, and that's strong validation, right? That basically you keep seeing that, and I think that it has a lot to do with how much they've grown. Also, I don't think necessarily everybody was aware of it earlier, but it's now quite prolific and also become like the top choice for many different protocols. So that's a strong validation for us as well as we speak to other teams, to invest in otherwise.
Thanks a lot, everyone, for all the kind words. Very much appreciate also everything you contribute to the Pyth network, because as you mentioned, like it's not just a team, it's a network, publishers, users, and now the governance. I see we have 10 more minutes or so. We would like maybe to close on hearing from like a few of you, or if all have an idea on like the two new trends that are too new to like for us to see by next year or next 2 years, but like within 5 years or 10 years, is there some kind of vertical that we don't see today in crypto that we will see in 5 years, in 10 years? So for example, and Alpen mentioned Deepin, Helium, so IoT, mobile, and that also Cheyenne invested in with Multicoin. Is there like, is it healthcare? Is it like any new type of like vertical you think crypto will capture in the next 5 to 10 years? Maybe Cheyenne, if you want, if you have or Nic.
Yeah, I'll start with two. One pretty niche one, I suppose, is actually bringing roll-up architecture over to Bitcoin itself. I think Bitcoin is still, probably the most important asset out there, at least in terms of dry powder, and it's been woefully underdeveloped so far. And I think learning from what other protocols have developed and bringing that to Bitcoin, particularly with ZK rollups, I'm very excited about. The second thing I'll say is using blockchains for verifiability for arbitrary content, especially as we enter a world of AI where basically it's very unclear whether content is legitimate or authentic. And I think ultimately we'll enter a paradigm where, you can't prove that something is fake, but you can prove that something is real. So I think we'll be continuously attesting to sort of original human generated content on blockchains. I think that'll go a long way towards ameliorating sort of epistemic AI issues. So those are kind of two things I'm excited about.
Yeah, I was going to mention sort of proofs of computational integrity as well. I think that's a super rich vein. Experimentation, being able to kind of give guarantees around the provenance of either a piece of content or a specific computation or the execution of specific code. feels more and more likely that it's going to be important over the next 5 or 10 years, especially in like mission critical things. I guess the other, maybe one other more general trend that's interesting is sort of, you know, when you look at the things in crypto that undoubtedly have product market fit, I think trading and exchanges, right? It's pretty hard to refute the fact that there is a demand for people to kind of come onto these exchanges and trade assets. And over the last kind of few years, especially in like massive bull cycles, right, it becomes a question of what exactly are people trading? Like, are all of these things just attention markets and, you know, essentially broad speculation games? I think we're going to start seeing your teams at the consumer application layer try to channel some of those instincts around issuing new assets and creating new assets and like harnessing that speculation in a way that's not kind of so simplistic or harmful to the end user. You know, when you look at things like Frentech, everyone has kind of seen that social token dynamic play out a lot over, and we've all watched that movie a few times over the last few years. But I think there's something core about the idea of like issuing new assets and finding ways for your users to kind of interact with those systems and trade new things, leaning into speculation without, you know, completely wrecking everyone that participates in the system. So I think most quote unquote consumer applications that build, you know, along that spectrum are gonna lean into speculation in a more responsible way. I think that's gonna happen a bit more.
When obvious like success, at least on at my little level, I have observed is Chili's and Socios. It's like issuing new token in relation to like a sports team. Like people love the sports team. They love having a say in this. So I very much agree that it's like whenever you can associate yourself with something, it's very powerful. Jonas, Alpen, anything you want to add, or Jose or Jordan? Like the next Frentech, I don't know.
Yeah, just quickly on my side, I think for like new applications, I mean, we have yet to see something substantially disrupt like a major vertical. I think obviously, as people have mentioned, whether it's payments or trading, that's where we're seeing the most validation for, you know, growing market. But I think one of the constraints also is just that we don't have infrastructure that can handle the scale that's required for a major, you know, a major vertical yet, or we haven't seen it necessarily happen. And I think that, you know, we recently invested in a company called Linera that focuses extensively or exclusively on this problem of how do you scale like billions of simultaneous transactions, not just, you know, hundreds or thousands. And I think that when you're able to achieve something like that, then you're able to potentially get into, you know, what we currently have with larger, you know, Web2 applications that are global, that are available to people to use all over the world. I think, you know, as far as like a particular, not necessarily vertical, maybe something that's horizontal is around privacy. I think we're seeing a lot of innovation, and yet some of it seems specific to crypto, but obviously this whole question of online privacy, online identity has not been solved. It's going to continue to become a larger and larger problem that just can't be regulated. It has to be innovated through. And I think with AI, there's additional compounding issues with identity and privacy. And I think that there are some core innovations coming out of the crypto and the Web3 ecosystem that will help to solve that. I don't think it's immediate, but I think that in the next 5 to 10 years, I'm hoping that it will. So yeah.
Yeah. I have two, maybe a bit more out of left field. I think one of them is just that I think launching tokens is definitely like one of crypto's killer apps, sort of for better or for worse. And I think the new like MiCA regulations actually open up some possibilities for doing like compliant ICOs, or there's like some disclosure requirements and some some other things, but all like pretty reasonable things that honestly should have existed with ICOs and would have avoided a lot of the madness around them. And I think like someone will nail a product around like global capital formation using this primitive, and like we're incubating a project that's looking to do that. And then the other side is, I think when you build projects in crypto, you kind of realize the limitations of smart contracts, and in the sense that smart contracts are very good at like delineating like escrow agreements and things that can be expressed in smart contracts, but like people can't be deposited into smart contracts. And so there's a lot of limitations to like the surface area of kind of like cooperation that you can encode into a smart contract, right? You can't do like a non-compete. You can't do like an insider trading policy, right? So we have people like Sifu front running a DAO for years. And there's all these like limitations of it. And so like, I'm very bullish on the idea that our general counsel put forward for like these Borgs, like cybernetic organizations, which are basically half smart contracts for automating the things that can be automated with smart contracts, like escrow agreements, money transfers, this kind of thing. But then you have a sort of legal entity that encodes like behaviors, non-competes, insider trading policies, limited liabilities, and that will basically like expand, I think, the surface area of what DAOs can do by a lot, having these because right now, it's like, I think the model is either everyone votes on everything, which is incredibly inefficient for reasons we don't have to discuss, or you have like the worst of both worlds, where it's like a multi-sig decides everything, and it's literally like anons on the multi-sig with no agreements between them that are just like managing billions of dollars of capital with no limited liability or anything. And I think for DAOs to scale, you really have to have this delegation of decision making to like empowered bodies that are sort of like answerable to the DAO and have accountability to the DAO, but have independence and autonomy within their remit. And that can mean like certain governance decisions that they make, like a risk board, for example, that sets risk parameters or something like that, or an emergency board, right, that has the power to pause the protocol in case of a hack, or like a treasury board, right, that manages a treasury on behalf of the DAO. And I think this will really expand the surface area of cooperation. And then I think as that happens, it will bring about like a crypto native legal system eventually, I think, where I think there will be like the Aragon Court / Claros vision of this like global dispute resolution network, where you can have DAOs enter into like much more complex arrangements of like partnership and cooperation and resolve them much quicker than you could with a legal system via this like sort of on-chain court system. And yeah, I'm really excited about that. And I think that's a product that, again, it's not something that's going to bring in millions of new users. It's something that expands the capabilities of what the current DAOs can do. Yeah, sorry, I know we're coming up on time.
Thank you so much, Jose, for this thorough answer. Jonas, Jordan, if you have like the 10 seconds so we don't delay our next wonderful presenter.
Yeah, I was just going to actually add that I couldn't agree with Jose anymore. I think we tend to overestimate like all the things that crypto or tokens can do. They can't do everything. Common law was developed and created over hundreds and hundreds of years, and there's a lot of wisdom in some of that. Math is law is great to some effect, but it can't solve for everything. So ultimately, we need to coordinate as humans. So that's the only thing I'd add to that.
And Jonas?
I mean, for us, it's the core primitive of getting as much as possible on the blockchain. I mean, when we do OTC trade today with a fiat leg, we can't do it atomically because we can't get a consensus mechanism in the real world. Like, let's get stuff on chain, and hopefully the Pyth Oracle can help not only getting pricing on, but a lot of other things we can apply across, all the use cases mentioned here. I think that's the core thing we look to, and hope to be surprised to see what we can get on in I would say, in a way where we can have consensus around the information is being right on chain.
Thank you so much, everyone. Cheyenne, Nic, Jose, Alpen, Jordan, Jonas. Thanks for your time. Had a pleasure. Thanks for being amazing Pyth supporter.
Appreciate it.
Looking forward to see you again.
Thank you.
Thank you.
Bye, guys.
Thanks for doing it.